Good morning and welcome to the day ahead. It's March the 24th. I'm Nadine Blaney. Well, getting into it, and what goes up must come down. Stocks on Wall Street giving up the recent boost from hawkish U.S. Fed speak, with oil spiking on further supply chain worries, sending energy names higher, but not enough to offset the falls in consumer stocks. The Nasdaq again back in bear market territory. Stock-specific, Adobe was the biggest drag after the company said it expects a downbeat quarter, with both revenue and profit to be hit by the ongoing Russia-Ukraine crisis. Google also in focus, pausing ads containing content exploiting or condoning the war. And GameStop, again, a bright spot. Shares rallied further after its chairman, Ryan Cohen's investment company, bought 100,000 shares in the video game retailer. U.S. two-year yields also lower, but do remain on track for the biggest monthly gain since 2004. Traders are closely watching the 2- and 10-year curve for an inversion. Now, plenty of Fed speak again overnight, with St. Louis Fed President and known hawk James Bullard saying that policymakers need to think bigger and act faster on rising rates, given inflation is over where it should be. For markets, the question, of course, remains just how far the U.S. central bank can go when it comes to hiking the official benchmark, and then what impact it will have on the economy.
The ability of the Fed, how far it can raise rates, given just the sheer size of debt that it's carrying and the exposure, which really probably limits the US Fed to raise rates by, we think, more than about 2%. After that, we think there's a real risk of a recession coming in. There's sort of three waves that are coming through. The first wave that we see today, which is high oil prices, whether that's costing $200 to fill your car up, and then the consequences of that as it moves through. So over the next 12 months, we think prices are going to continue to rise as a result of that first wave.
Now, on global markets, the Moscow exchange is set to resume some stock trading today after nearly a month offline. Non-residents, though, will have to wait, with foreigners banned from selling stocks on OFZ ruble bonds until April the 1st. European markets followed U.S. markets lower, actually preceded that, with the MSCI's broadest gauge of world stocks declining for the second session, down 0.7%, but still hovering near pre-war levels. On the currency front, and the big dollar was higher as the euro weakened, with oil prices again jumping, and that sent the Aussie dollar higher. This all came ahead of the U.S. President Joe Biden's trip to Europe, where more sanctions against the Kremlin are widely anticipated, with NATO and EU leaders convening at an emergency summit tomorrow. The Japanese yen also lower, hovering around 6-year lows. And sterling was down 0.5% on the day, retreating from a 3-week high after inflation again shot up faster than expected last month to touch a fresh 30-year high at 6.2%. All of this comes as the UK moves to ease the cost of living hit, taking the scissors to taxes for workers and reducing a duty on fuel on the heels of that data as he sought to soften a severe cost of living squeeze. More broadly, gas prices in Europe spiked after the Russian President Vladimir Putin said he would be seeking payments in rubles for gas sales from unfriendly countries, defined as those who have imposed sanctions on the Kremlin. So how are we looking for the session ahead here at home? Well, the local market is expected to track its global peers. The SPY futures are pointing to a dip of 0.75% or around 54 points when trade gets underway. Crude climbed over 5.5%. Iron ore was higher, holding above the US 146 a ton handle. And we saw ADRs of BHP and Rio in New York up 2.4 and 1.6% respectively. Gold was up with yields down. It's pretty quiet again on the economic front here at home today, but markets will be watching out for Washington H. Soul Pattinson's half-year numbers. That does it for the day ahead. I'm Nadine Blaney. We'll see you tomorrow.